Today we're talking money, cash flow, and business trends with the creator of Cashflow Ninja, MC Laubscher. Episode 210 features MC Laubscher, entrepreneur, cash flow investor, and educator.
How money actually works, there's a value equation, right? So if you can go out and provide value to the marketplace through your skill sets and your capabilities, the world responds by money coming towards you for the value that you provided to society. And so if you can figure out how to, through your skill sets and capabilities, provide value, then you're going to receive more of the medium of exchange. And once you make that switch, you're like, oh wow, there's actually not a limited pie on this planet. The pie is actually unlimited because the more and more value we all create in the marketplace and exchange with each other, the bigger and the bigger the pie gets.
I'm Andy Wong, host of the Inspired Money podcast and financial advisor at Runnymede Capital Management. I'm so excited to have MC Laubscher on the show. He teaches people how to escape the rat race and replace income the way he has through cash flow investing. MC is a member of the Forbes Finance Council and creator of the top business and investing podcasts, Cashflow Ninja and Cashflow Investing Secrets. In this episode, you'll learn the importance of mentors and building a wealth team, making time for strategic thinking to optimize your life and business, and different ways to create cash flow income streams. Make sure you listen to the end to hear how cryptocurrency can fit into a cash flow strategy. Now let's get inspired with Chief Cash Flow Coach at Cashflow Ninja, MC Laubscher. MC, welcome to Inspired Money. I'm so excited to have you on the show.
Thank you so much for having me.
Let's jump right in. What's your earliest childhood memory of money?
You know, it involves pain. So it's interesting, and I love that question, by the way, because I still remember, I grew up middle class, but my parents were, working really hard, trying to make ends meet at that stage. So I remember that we didn't have a lot of it. I still have pictures as a little baby in the background. We had like bookshelves, and it was like on bricks and on pieces of wood. So I think that was kind of like my first memory with it. But I love the question because we all grew up differently. We grew up in different parts of the world, right? We don't get to choose where we are born, to who our parents are, who our families are, what community we're in, religion, language, and that kind of stuff. And that plays a big part into your paradigm and your worldview and your relationship with money. So I love that question.
So you were in South Africa, and I've heard you say that you once had a scarcity mindset.
Yes.
What were some of those early experiences in South Africa that shaped that sort of mindset of money?
Yeah, it was, I think it came back to the childhood memory too. Seeing that my parents were working really, really hard, trying to make ends meet, and there was never really there was an abundance at that time. So they, like I said, worked really hard to provide and provided that. But we always were cognizant of money and spending money. So that's where you essentially develop your relationship with money, right, as a child. Because we don't necessarily learn by what people tell us. We learn by what we see and the conversation. So we never talked about money in the house, but it was always sort of a scarce thing. I heard the same thing as a lot of people have heard. Money doesn't grow on trees. It takes money to buy that. We don't have money for that right now, that kind of stuff. So, so that has a huge impact, and it provides a scarcity mindset because you kind of develop a mindset of a world of not enough, right? And it takes a massive, massive effort to change that. Maybe there could be some experiences that changes that once in a while, but it takes a massive effort to actually switch that mindset from scarcity to abundance.
You're a big cash flow guy. That's not something that most kids are exposed to. What did you want to do when you were a kid?
Well, essentially, I just wanted to play sports. I was into sports, and I wanted to play sports and um, play sports at the highest level. So I guess if you had to ask me, what did I wanted to be when I grow up, it was playing professional sports. I loved it. I loved the teammates. I loved working really hard. I loved the goal setting part of it, the personal development. That's how I really got into it. But eventually, the money thing came later, and it actually came as a side effect of sports because I started traveling a lot, playing in different cities, playing in different countries, and so forth. So, what do you do to kill a lot of downtime when you're not playing sports or either practicing or training? Well, you pick up, hobbies or habits or something like that. So a lot of folks got into video games. A lot of folks got into other sorts of stuff, reading novels and so forth. I got into money because my mother gave me a book, Rich Dad Poor Dad by Robert Kiyosaki. Because at that stage they were going through some changes in their life again too. She came across the book. Of course, he's a great marketer, so it was in the window, of every store. Saw it and paused it to me, and that kind of made me embark on that journey to understand that, hey, I have a really big opportunity here. I can pursue a career in sports, but I can learn other skills and I can learn other things while I'm doing this, so that eventually, when this passes and this phase of my life passes, I would have certain skill sets and capabilities and knowledge and frameworks and models to actually go out and do something, right?
You were competing at a very high level athletically. Was that the U.S. national rugby team?
Yeah, so I was on the U.S. National rugby team. I was in the pool for a number of years, and I was actually in the 2007 Rugby World Cup training squad. And eventually, my career ended that same year with an injury. But yeah, I played at a very high level for a number of years, which was a great experience. Learned a lot of things that actually equipped me for the next phase of my life.
Yeah, it's a lot of lessons to be drawn from sports, whether it's listening to your coach and finding the right coach,
Yep.
training, discipline. How is it, or what is it about Robert Kiyosaki's book that was so life-changing for you? Because it sounds pivotal in your life.
Yeah, it was. At that stage, I was, like I said, I was trying to learn something else, and I was reading a couple of different books around money, and I came across his book, and it was completely a game changer because of the different context that it provides. Not necessarily the content. If you ask a lot of people, what did you learn about that? Some folks, it's hard. They say cash flow. Yes, okay, we understand that. But I think the big picture is it shifts your context of how you see the world of money. So for me, it really changed the way that I look at it and say, wait a second, there's a game here, just like the game that I'm playing right now. There's rules here, just like the game that I'm playing right now. There's players. There are absolutely great players and there are average players. What do the great players in this game of money do? And then I looked at this and said, well, if you want to excel, like you said, in sports and play at the highest level, you've got to get the team behind you to get you there. Your strength and conditioning coach, your mindset and psychological coach, your actual game coach, your defensive coach, or whether your head coach. You need a team behind you. And I'm like, that's how the best players in money, that's how they actually do it as well. So there was a lot of overlap in that, and it just was a big aha moment for me. And I'm a person that loves to take action. So in sports, when somebody said, let's do this, I would go and do it because I trusted the people around me. So the same thing through the book. I took action. Looking back now, it's kind of funny, but I dived into real estate. I bought my first property. I was 21 years old, about 21 years ago. And I was very lucky that it worked out really well very quickly, where I collected all of the rent, I paid all of the expenses associated with it, and there was money left over at the end of the month. And I looked at this and I go, wow. This could actually work. And of course, then school started, right? Because then you have bad tenants that don't pay rent, people that damage your property. But essentially, it was a game changer for me because it changed the context in which I view the world of money. I think that's the big powerful thing about it.
For somebody who's looking to get started,
Yep.
they like the idea of creating income, like income streams, cash
Yes.
flow. Can you take us through like your first couple of properties and
Yes.
investments? What did that look like?
Yeah. So the first thing that I will say for someone that's interested in cash flow, the big thing about money and the game of money is that there are so many ways to go about it. It isn't just specific one asset class or one asset. Yes, there's a blueprint. If you look at all the different ways that you can do it, there's sort of a core kind of, I would say, there's a core checklist of things that need to be in place. But that's the one thing that I would share with your listeners is that there's so many different ways to do it. We live in a world of marketing, of course, and there's maximalists everywhere. So this person this is the only way to do it, and this person says that's the only way to do it. And that's the first thing that I would share with your listeners is there's many ways to do things. It depends what your interests are, what you're passionate about, what your knowledge base is, what you like to study and learn. I'll share one example before I dive into the second part of your question. I have someone in my network that he is a medical professional, and he used to buy medical practices that are distressed, and he had a formula and a blueprint of how to take those medical practices and bring in his team. That was his unique ability, how he provides value to the marketplace in the world, and restructure those medical practices and turn them around to be very profitable and cash flowing machines. So that was his gift, his unique ability, his knowledge. He comes from the medical world. He understands the business and so forth. So he reached out to me the one day. He's like, well, I want to start investing in, real estate, and I want to start investing in Bitcoin and so forth. And I was asking him why, trying to get to the bottom of this. And it turns out because he's just seeing that other people are doing it. And I said, you understand what you're doing already is you're a cash flow investor. And he's like, what do you mean? I said, you have the ability, your investment niche is businesses, more specifically the medical practices. You can go in with your formula and your team and your relationships. You can fix it up and you can produce cash flow in those businesses. And I said, and by the way, who owns the properties that these businesses are in? He said, well, I do. I said, well, there you go. So you own the real estate, which you generate cash flow from. You have the businesses that produce something for you. So you're already doing that. And then, of course, he's diversified in other areas. But I wanted to share that because there's so many different ways to do it. So, understand where your unique ability, your gift, your knowledge base, your relationships, and so forth. Because, after that call, he's like, oh, so I am I'm doing the cash flow thing already. But yeah, in the example of my own life, the first thing that I wanted to do is I started with, I was very, very young. So I started with, it was an apartment complex with condominiums, I guess is what you would refer to it in South Africa, that was in a very up and coming part of town. So I understood, being from that area, what was going on in the marketplace, speaking to a lot of people because I didn't know anything. So that was great because a lot of people would share because they're like, well, this kid doesn't know anything. I'll tell him what's going on.
This kid needs help.
Yeah, this kid needs help. So I found out that there was an area that a lot of people were moving to because it's pretty close for a commute to the city of Cape Town, and it was very up and coming. There was a lot of real estate investors moving in there from speaking to real estate investors, asking a ton of questions. At that stage. So then I knew that where I wanted to look for a place, and then I found a place that was within my price range, a 2-bedroom, 1 bath, 2 blocks from the beach that had about a 30-minute commute to Cape Town. And I thought to myself, this will be a great place to buy this property because I could get tenants in them, renters in there, and it's going to be in demand. And like I said, I was very, very fortunate and lucky that the first one, the first deal that I did, was in the right place. It was rented very fairly easily to folks, and it never really had a problem renting it. And of course, I got nice appreciation in that area because a lot of people were moving in. And the same thing, properties following that in the United States, I kind of took the same approach to that. The one mistake that I did make is I was so focused just on one thing instead of looking at an overall strategy. And I think for investors sometimes they just think of one thing, one stock, or one cryptocurrency or real estate and so forth, that they miss all the pieces around it. And one of the things that I missed was I should have proper reserves in place. I should have proper capital allocation outside of the real estate. But I just got so excited, and I'm a young kid, so didn't know any better. So as I was buying my first property in the United States, and I got tenants in and rented it, and I wanted to buy more and more properties, one of the things initially that held me back that I needed to figure out was having other things around me, because what happens in real estate is tenants don't pay, things break, the normal stuff, the usual stuff, and you need reserves for that. Otherwise, now you're back on credit cards or, as an investor. So,
did you learn that the hard way?
I learned that the hard way, the very hard way. Yeah. So, as I was trying to buy more properties, I mean, I had another property under contract, and then all of a sudden a pipe burst, in one of the other properties. And it happens, more than often, that when a pipe bursts and a property is not usable for a while, tenants don't want to pay rent in that property too. So, you have those kind of things. But I think like the big thing from a cash flow investor that I learned is it's not just the investment of cash flow that you have to look at. It's also the cash flow in your personal economy, having proper capital allocation, having reserves, right? How many people learned that lesson last year? If they didn't have any reserves in place or money that they can access because they now either lost their job or they are unable to work and so forth. So I think cash flow is one thing, and you think cash flow, you think investments, but it's also your economy of what's happening inside of it.
Getting back to where we started, because you've had the luxury and privilege of interviewing so many Cashflow Ninjas,
yep,
and learning so much yourself, what does that investment team look like?
Yep. It's a great question. And it all depends on the needs, but essentially all of them have, the big part of the first thing that I've noticed with them is they're sort of a formula of their intellectual capital paired with their relationship capital. And that usually gives you financial capital. That's the one thing that I've noticed with all of them, because all of them really invested in themselves as the asset, developed themselves, increased their intellectual capital, and then they developed relationship capital, meaning folks in their network, masterminds, coaches, mentors. All of them seek out a mentor, every single one of them, because you don't know what you don't know. That I have to say, looking back as that young kid too, the one thing that I did, and I made a lot of mistakes, more mistakes than you could count. But the one thing was, I'm like, I have to find someone to help guide me that's done it before, and that's what they all have. So the first member of their team usually is they find a mentor, and the mentor helps them to put the other pieces together, because you don't know what you don't know when you first get started. So a mentor, for example, can share with you. Not only the team members that you would need, let's just say, let's stick with real estate. If you're a real estate investor, who you would need and who you would need on your team, but he can also on the other side go, just not lose sight of, for example, your tax strategy too, because that's why you're becoming a real estate investor. So you need a tax strategy. You need an asset protection strategy. You need an estate strategy when all these things come together. So besides your real estate investing, you need all these other things in place. So that I think that's the big thing that I've learned from them, is that's the first person that they would bring onto their team. And then as they grow and they reach a new level, they find other mentors to take them to the next level.
MC, you've built so much in 20 years being in the United States, from that first investment property to building a business, having a podcast. How many revenue streams do you have currently?
Uh, Yeah, a significant amount. Different in your business. So you would have in your business, you would have different revenue streams, and it could be like in the podcast. Let's just use Cashflow Ninja. So you would have, you would have sponsorships, affiliates, products that we design. You would have in our other business, we have, for example, we have products that we sell to that one. Then there's several asset class that I'm invested in. So currently 6 of them. So in between them, there's different ones. So I haven't counted every single one of them, but I'm going to say that it's probably between 15 and 20 right now.
And how do you think about when you're, because it's got to take some creativity in trying to figure out what do you want to build in the next 12 months or 3 years? How do you kind of look at your portfolio and think about what to work on next?
That's a great question. So I try to figure out, and I'm a big student of history and economics, and I love those topics, and I love studying, obviously, finance. I have an MBA in finance, and I love studying what banking and what's happening in the financial world and the global monetary system. So I look at all of that, and that's sort of a framework that I use. I'm looking at, okay, where are we in history? How did we get here? What's currently happening? And what are the probability of the following things happening because of where we are and what got us here? So that's one of the frameworks that I use. The other framework that I use is I'm part of a coaching group called Strategic Coach by Dan Sullivan. It's a great, phenomenal group. And Dan has a framework called DOS, Dangers, Opportunities, and Strengths. It's a great, by the way, I use this every single day for my businesses and my investments. And the first thing that I do is I look at the dangers that are out there. So I look at what threats or dangers are there to my business and or my investments. And then the second part of that is what opportunities exist. Because if there's a ton of threats, and like, for example, disruption, there's going to be massive disruption with AI, machine learning, 3D printing, 5G, the Internet of Things. Well, I mean, we could go on and on with all the stuff rolling out. We're now in the 4th industrial revolution, essentially. So that could be a threat, and you could sit there paralyzed, or you could go, wow, okay, I see these threats, but the opportunities that this brings with it is just, there's so many opportunities. So how can I leverage and utilize some of those opportunities in my business? What other businesses can I invest in, for example, that will position myself to capitalize on certain trends? So I'll share one trend with you, well, 2 that is, it's just gaining momentum and steam that I see because I use the threats and I look at the opportunities, is privacy, the need for privacy. People are realizing that nothing is private, that they want more privacy in all areas of their lives, and businesses have already capitalized on those opportunities. So from phones that are encrypted to computers that are encrypted to things that you can put devices in, from emails, cloud software. I mean, just think of the industry already. It's nuts. And the majority of the public hasn't even gotten to the privacy part yet. So I look at that and say, there's a trend. How do I position myself? Can I create a product, for example, in Cashflow Ninja to teach and provide an intellectual shortcut on privacy, having a VPN, having private browsers, how to protect your online identity, all that kind of stuff? Or is there another business that, for example, there's a computer company that are doing the encrypted computers and phones. They're looking for investors. Can I invest in that company? So, and how can I capitalize on that? And that's a third part of the DOS framework, the dangers, opportunities, and strengths. What skill sets and capabilities do I have? Skill sets meaning Can I provide value? Do I have knowledge already of this? Do I use this? Can I teach this? Capabilities? Do I have capital to deploy into other businesses? Another thing that a lot of people talk about, and I'm sure you've talked about it too, is cryptocurrencies and blockchain. So when I say that, all they think about is coins and speculating in coins. I like to follow the California Gold Rush strategy, where the California Gold Rush strategy is the people that actually made fortunes during the gold rush wasn't the people that went to California in 49, to pan for gold and dig for gold. It was the people actually selling the shovels, the picks, the equipment, the people selling clothes and shoes like Levi and Strauss, jeans, the people that housed them, the people that fed them, the people that provide entertainment, the people that provide financial services. Wells Fargo comes out of that. So in that space, I'm looking more at. I'm not looking for a coin to bet something on and speculate. I'm looking at and seeing who's building businesses for that world where this is going to, and figure out if I can directly invest in them as an investor. So, for example, if you were able to invest in an exchange, which Coinbase is now obviously public, but if you were able to invest in an exchange before it went public or even afterwards, well, now you're an investor in the cryptocurrency exchange. So you don't care if Bitcoin, the price dips 55% or it goes up 100%, because the volumes of transactions are about the same either way. And you as the investor get to now invest in a business in that space that increases in value because the more and more people use it. So that's kind of how I look at what's next. What's next in business and investing is like, so much opportunities with all these many things. And another trend that I'll touch on is probably biotech. I mean, look at the upward potential just in biotech companies and what they're putting out. So you're looking at where the kind of the puck is going, using the sport analogy too, with Wayne Gretzky. You look at what happened, where are we right now, how did we get here? The world fast forwarded 10 years and 6 months. During 2020, I always say to folks, listen, we were going to end up here anyway in 10 years. People were going to work from home. They weren't going to go into an office necessarily to go and work. The delivery, the shipping, robotics, packaging, that kind of stuff. So we were going to get here anyway. But how do we find opportunities now? Because there's just too many of them, actually, which is kind of comical. You and I talked about the scarcity mindset, but instead of shrinking, hiding your head in the sand, looking at what's going on and saying everything is scary, I just can't deal with this. No, deal with it, because you're going to see a plethora of opportunities for yourself.
It's interesting because fortunes have been made even in a pandemic.
Yes.
So there are always opportunities on the horizon, and people pivot and adapt.
Yes.
Do you need to carve out time, because you're an owner operator with these multiple income streams? Do you need to carve out time for that strategic thinking? That sounds so important.
I have thinking time. So I have a process that I call thinking time. So I think for an hour a day by myself, and I sit with a notepad and I perform these exercises. And I think that's, there's a mentor of mine that told me this, because sometimes you get caught and you just focus on, you're just all in and you don't stop. You just keep going and going and going. And he said to me, MC, if you go on like this, you're going to work hard and make a lot of money, but you're not going to build any wealth, because you're just focusing on, the money part. You're not focusing on actually getting wealthy. And I was like, what do you mean? And there was a quote from Henry Ford that was kind of similar. Don't work too hard that you don't have any time to build wealth, or something like that. I butcher quotes. That's what I do. But it's to the same extent. So I made a intentional goal that I do every day, and I sit down and I think about this. And I think it's very important, because otherwise, if we just keep going and we're living in a society where it's like just little things drawing you in from all over the place, you're never going to be able to just sit down and figure out what's going on, think deeply through certain scenarios. You're not going to realize what's going on. So for me, it's great. I would recommend that anyone do that, because focus. I mean, it's a lot of work. focusing on your own wealth and your wealth strategy. It's a lot of work. It takes, the whole thing where I review the businesses and my investments and look at all the stuff. I do that about once a month, and that takes a couple of hours, sometimes half a day, sometimes it could take a full day, depending on how I deep dive. But during the week, I definitely do some thinking time because, like you said, more and people should probably look this up in their favorite search engine because I don't know the exact number, but there's more millionaires and billionaires, created in such a short span of time like last year. I forgot the statistic that I read, and what do they say? 99% of statistics are made up, right? But I forgot the statistic, but it was incredible to see how many millionaires and billionaires were made. And for listeners out there, in a crisis, just think of what happened in 2008 and 2009. It gave us Uber and Airbnb, and all the entire sharing economy was created in that crisis. So it's the same thing that happened last year, where there was a plethora. Just think of all these delivery companies, the Uber Eats of the world and that kind of stuff, that just exploded. Zoom, there's so many companies that did really well because of the environment, and they were able to adapt.
Yeah, and then for those who had cash reserves, those crises pose buying opportunities, whether it's real estate or stocks, all kinds of assets. Those are good buy points.
And to your point, that's again with the whole cash flow management thing, is if you had cash reserves, part of your own economy cash flow, absolutely, you were able to capitalize on opportunities and buy stocks or real estate or cryptocurrencies at very low evaluations, or even in businesses, right?
How do you manage that? Do you have a fixed number in your mind of what cash reserves can be, or do you also let kind of market conditions dictate you want to be saving more right now for a rainy day, or you feel like you're coming out of a cycle and you want to deploy everything you've got?
That's a great question. So I usually my minimum standard. I always there's another mentor of mine that said, usually we don't necessarily reach our highest aspirations in life. We have minimum standards, and that reflects our life basically. And it's the same thing with money. So my minimum standard has always been 6 months of living expenses for my family, our economy, my business economy, and then also my investment economy. So that's the bare minimum. If it tickers below that, then the alarm bells go off, and I make sure it's over again. But right now, because there's so many manias, in a lot of different asset classes, and within the asset cycle, just look at real estate. It's beyond the boom phase. We're now in mania phase in a lot of this. So you have to be very, very wary as an investor. So right now it's over 12 months. So now my minimum standard, I raised it to 12 months, and I'm trying to get as much cash as possible. Now, again, most folks will listen to this and say, well, what about, inflation? What about the economy? What about that market? Again, you have to have a stable of horses doing different things for you. Because, again, we're marketed to in a maximalist way. I have to put all my money in Bitcoin because the US dollar is devaluing. Well, what if Bitcoin falls to 55%, right? And if you had cash, then you would be able to buy some more. You would be in a good situation. The same you get the same conversation in the gold and silver crowd, the commodity sector, which I'm invested in as well. You get the same conversation in the stock market. You get everyone kind of, there's a lot of maximalists everywhere. Right now, it's good to be diversified, and especially with cash, because the US dollar is still the world reserve currency, and that's how you have to plan.
I want to talk about that a little bit.
Yeah.
But you're about to have another new stream of income, passive income. You have a book coming out called The 21 Best Cash Flow Niches. Do you say niches or niches?
Yeah, niches. Yeah.
For somebody who is starting out, and this kind of goes back to Robert Kiyosaki's book that made such a big impression on you early on, how do people have to change their mentality? Because in the US, we have this consumerism is so strong.
Yes.
And materialism.
Yes.
But I get the sense that you're really thinking about how do you deploy your money? How do you buy assets
Yes.
and not buying things that just for the sake of buying it. Like you don't need 50 shirts.
No. No, it's so true because I think there's a massive consumer mindset and I mean if you look at the savings rates, it's scary.
Like, is that how your mind works when you're walking out on the street?
Yes.
Are you looking around and looking for assets that you think might be underpriced that will
Yes.
grow?
Yeah, and I think of if we look at purchasing something or putting capital somewhere, I look at how do I find an asset that can pay for that because I don't want to pay for that. So I'll give an example. So my wife had student loans, for example. So instead of just taking the cash and paying off the student loans, I'm like, well, we're not doing that. Let's find an asset that then generates income and provides tax advantages that pays the student loans off, which we then were able to do. Because if you had the money and you had the student loans, it's gone. It's a wash. But now you have an asset, you pay for the student loans, and now the student loans are gone, but you still have the asset.
Did you find that in real estate or somewhere else?
The energy market. So I found that in the energy market. But there's other ways to do that. But I always look at if I want to buy something, how do I get something else that can pay for that? And the nice thing about, we spoke earlier about growing up in different parts of the world, and you have a different perspective, you have a different mindset, you have a different worldview and paradigm. So, I grew up in South Africa, and Africa in general, in parts of South Africa, there's a lot of poverty, and you realize too when you grow up that I'm still like that. I don't need all this stuff to be happy. There are other things that make me happier. So instead of spending on a lot of stuff, I'd rather, play the game, which I love playing games, which is try to find more assets to help me than buy other stuff. We all have desires. I mean, let's be honest. Come on. We're humans. That's how we're built, right? And I've lived in the U.S. for 20 years, but it's discipline. It's hard work generating and doing this. It's not easy. It sounds easy when you talk about it, but the self-discipline and the delayed gratification, which is the hardest part of anything, whether it be a diet, whether it be relationships, or whether it be money, if you can master that, then you can build some wealth.
For you and your wife, what did energy investing look like? Is that energy stocks? Is that the actual commodity? How did you do that?
It's actually a direct investment in a company down in Texas that has a proprietary process of taking coal and putting it through distillation ovens and units and extracting the toxicity and some chemicals from it to generate a cleaner, quote unquote, type of coal. You can't clean coal, even if you try how hard you try. But it also then delivers a pharmaceutical grade type of oil, and then you have the cleaner product, and then you have different folks buying it. So it was a direct investment in a company that has a proprietary process. So the great part about that is essentially for folks that are familiar with oil and gas drilling, it could be great, but you have to strike oil for it to be great. So exploratory drilling, although it has great tax benefits, sometimes folks can lose all of their money there. It's very risky because you still have to strike oil and drill oil in exploratory drilling.
It's like finding the gold.
Exactly. So what this company was able to do is they were able to structure a deal through their process that mimics essentially all of the parts of the oil and gas investment, but you have the raw materials already, and you have a supplier of that, and you have an end user that you're selling the products to. And then because you have the distillation units, you have equipment involved, there's significant depreciation, of course, through the tax code and so forth. So it's an investment with great tax benefits, but it also provides a steady stream of income. Sometimes in the energy sector, you're the saying a lot, the tax tail is wagging the dog, because there's a lot of folks that say, oh, it's great, it's a great tax, favorable investment, but that doesn't help if you lose all of your money in that investment. Then the tax, then the tax treatment isn't that great, right?
Yeah, that's like when someone has a great investment that works out, but they have to pay tax.
Yes.
And nobody likes to pay tax.
Right.
But you say that's a pretty good scenario because the fact that you have to pay tax means that you had a big gain. So
Exactly.
that's a good way.
Exactly.
Don't lose all your money.
Yeah,
Make
exactly.
money and pay your taxes.
That, it's funny that people are always, well, how can I make less money to do this? And it's like, no. You don't want make more money. That's your first thing. Invest in stuff that appreciate in value, instead of, trying to finagle the tax game. Get someone on your team in it that understand the tax code and understand the game.
MC, how do you think your relationship with money has changed over the last 20 years?
Oh boy, a lot. I've started to think of it as it's a medium of exchange. And I think that ties into the comment that I made earlier about the US dollar as the world reserve currency. So money is a medium of exchange and a representation of value. So when you just look at money, and most people are stuck on that, like, oh, it's money. It's not the money. It's what it represents. So it's simply a medium of exchange. We can exchange goods and services with each other through the medium of money, and it's a representation of value. So when you look at how money actually works, there's a value equation, right? So if you can go out and provide value to the marketplace through your skill sets and your capabilities, the world responds by money coming towards you for the value that you provided to society. And you do that from taking people from their current situation to a desired situation. So, regardless of the business that's out there, there are so many different businesses, whether it's a problem that you have, a pain point or a challenge or a desire or a want, there's different markets, right? So if you can figure out how to, through your skill sets and capabilities, provide value, then you're going to receive more of the medium of exchange. And once you make that switch, you're like, oh, wow, there's actually not a limited pie on this planet. The pie is actually unlimited because the more and more value we all create in the marketplace and exchange with each other, the bigger and the bigger the pie gets. And by the way, the reason why I'm in the United States is I got here 20 years ago and I saw the upward mobility in this country. I was just blown away. Growing up in South Africa and traveling quite a bit, you see many parts of the world. And when I got here, I just looked at this and I'm like, this is incredible. You got to be kidding me. There's nothing stopping you. Your own efforts, your creativity, and your work ethic is all that you need, and the sky's the limit. And that's why you have all these, stories in the United States where you have folks starting literally with nothing, becoming millionaires and billionaires. And by the way, I still see it today, and I think it's global because of the economy, this global interconnected economy that we have. So it's not just in the United States. You have access to a smartphone and a connection to the internet. It's unlimited. So it's definitely changed a lot over the past 20 years.
It does seem that technology, just armed with an idea, there's a very low barrier entry to starting a business. So that there are opportunities, and it doesn't take a lot of capital investment up front. You don't need to build a factory.
Yes.
Right? You could have like a used smartphone and suddenly have access to a very large market. If you had a product to sell, you could be selling something on Etsy or something like that.
Yep.
If I can ask you to put your strategy or strategist hat back on for a moment, since you talked about the dollar, and I know that you look at blockchain and crypto. Does blockchain and crypto have the potential to change completely the idea of what money is and what people's relationship to money is? And what happens to the dollar?
Yeah. I think it already has a little bit with Bitcoin. I think people, Bitcoin started as this idea of, it's a decentralized form of money. There's no central bank. There's no one person that has control over it, and the market is essentially the referee in this. And as the adoption rate grows, and as more and more people start to use it and incorporate it, the value of it increases. And initially, it was basically, people laughed at it, look at it as Disney tokens and whatever you want to call everything that it was called. But I think because they started to realize that, wait a second, not only is it a medium of exchange that is not controlled by a central bank or by a single person, but there's actually utility of moving large sums of money from one place to another place. I mean, you can move a large sums of money from your wallet to someone else's wallet without an intermediary like a bank. That provides a lot of utility to it. So it has really gotten people to think and change their thinking about what money is, and it really opened, if it's one thing that it's done, if it's opened the floodgates for people to think deeper actually about money and what money is. And we've seen now the adoption, whether it was corporations, now it's billionaires that are talking about it. El Salvador just made it a legal tender. There's other countries that's looking to follow. So there's already an adoption. Is it going to take over the world and displace the dollar, for example? I don't think so. I think that the central bank digital currencies is more likely where it's headed, and that's ready to roll out. It's already been tested at MIT in the United States. It's already been tested in China. The European Union has already done a beta test on it. They have white papers. I mean, folks can look this up online. There's white papers all over about central bank digital currencies. And central bank digital currencies is based on artificial intelligence. Another one of these things, words and terms that are scary in the fourth industrial revolution, where cryptocurrencies is based on cryptography. So I kind of see how this plays out. If I had to put my strategizing hat on and grab a crystal ball, which, by the way, side note, the crystal ball business is a tough one. But if you have to look inside a crystal ball, I can see eventually that central bank digital currencies would be adopted by governments and used within countries, because governments have the power to enforce legal tender. So they decide what's money, essentially. So I see central bank digital currencies as that. Cryptocurrency, yeah, there's going to be a use for it and a use case. It'll sort of be more like digital gold or a store of value eventually. And Ethereum will be like the S&P 500 index, essentially. Or the App Store is another good example of it, where a lot of apps are built on top of this platform. But yeah, it's a very interesting time. It definitely, it really got people to think, what is money actually? How does it work? Who controls it? What is the use case for money? How should it work? How should it function?
Yeah, it's incredible to think about the potential evolution of money because of digital currency. You alluded to the picks and shovels business and the fact that coins are very volatile. What is your view right now? How does blockchain or crypto fit into your sort of idea of trying to come up with different streams of income?
Yes.
Right, cash flow. How does it fit now?
Yeah, so that's a great question. So there's a couple of different strategies that, as an investor, that you can implement and execute in crypto. And I think that's very important for listeners to know too. And this is another lesson that I learned. You have to know when you save, you have to know when you invest, and you have to know when you speculate. And I preface that because some of the strategies is actually you're putting your investor hat on, and some of the strategies are you're putting your speculator's hat on. So when you invest in something, you can directly invest in companies, blockchain companies. For example, there's a blockchain trust company that I invested in directly through a private placement. And then there's other ancillary, think about tax, crypto tax companies. You're going to need that. There's going to be a huge need. So as an investor, you can invest directly in a crypto tax company that provides the services that people are going to need, because it's going to get very complex. And the rules keep changing. Who can stay ahead of everything and that just happening in crypto, right? It's treated as property. No, it's not. It's treated as this. No, so there's going to be a lot of those needs. So that's the first thing in that space. Then there is a cash flow strategy in crypto too, where essentially, there's 3 coins that have gained utility value. So Bitcoin has gained utility because you can move large sums of capital from one place to another without an intermediary. Ethereum has gained utility because you can build things on top of that, such as smart contracts. So smart contracts is, a whole nother topic in conversation. And then there's a third coin, which also gain utility value. It's stable coins. Now, stable coins is just backed by another asset, whether it be gold, whether it be a basket of crypto, which is kind of funny, or whether it be the US dollar. So US dollar stable coins, there's a huge demand for it because, like we said, the US dollar is still the reserve currency until it's not. And there's a massive need for it because if you have a lot of Bitcoin, for example, which a lot of folks got early, but you need to pay for living expenses somehow. Well, how do you do that without triggering a massive tax event? Imagine you bought Bitcoin at $300, and now, at the time of recording, it's probably around 45, around there. And now you need money, and you need to sell your Bitcoin. Huge tax, so you can actually borrow on centralized exchanges, US dollars, in stable coins. So there's a demand for that, and also traders. If you're trading in and out of the platform, people can move stable coins onto a trading platform, and when the price, for example, of a Bitcoin triggers their buy, they can move the stable coins into Bitcoin. So it provides liquidity in the market, which in financial markets is key. So folks can actually stake their stable coins for cash flow and earn a very nice conservative return on it, paid monthly and annually. It's a great crypto cash flow strategy. And also what it provides is stability, because let's just say you own some Bitcoin and Ethereum, you are invested directly into some businesses, and you stake some stable coins for cash flow. Well, if the price of Bitcoin goes down 55%, like on the last pullback, you still have your investment in the businesses, which their value is probably increased because of the transaction volume is increased on the exchanges if you're invested in an exchange. But you still have your stable coins, which is just stable. It's
Right.
still
It
there.
doesn't have the volatility.
Exactly, and it provides the cash flow. So when you think about crypto too, think about a strategy that works for you, and think strategically. Like, okay, let's just say I put 2% of my net worth or my assets into crypto. Don't just close your eyes, grab a dart and throw it at a dartboard. Be strategic. Think of, okay, where do I want to allocate it? Where's some upside potential? Bitcoin, for example, is like the digital gold. I mentioned Ethereum is like the S&P 500. This is not, of course, a recommendation. I'm just thinking through a strategy here, and then investing directly into assets, and then investing for cash flow. So you have to think strategically about it, of the different things that you can do to also provide some stability, so that when it falls 55%, you don't get a heart attack.
Well, I like the idea of diversification. I also like what you're talking about, knowing the difference between investing and speculating. It sounds like you're not saying not to speculate, but you better realize when you are speculating and control the amount that you're going to put towards that investment opportunity. A pretty significant part of your business and brand is educating people and helping people. And that goes back to your podcast as well as the new book that's coming out. How does that make you feel, helping people?
It's giving back. A lot of this stuff is, I wish these are the things that I would have known when I first gotten started. And my philosophy, by the way, around this too, is we all think about, our impact, right? There becomes a stage when you're like, what is my impact going to be? And for me, I've got 2 young children too. So I look at them and I think of, man, there's so much I still want to teach you guys, because I don't want you guys to go through all the pain that I did, which is, they need that too. I get that. But
shortcuts are good.
Yeah, but if I can provide some roadmap for them, or some blueprint, what would that look like? So that was the thinking. Obviously I started my podcast before I had my kids. I just wanted to learn more from what there was to learn from folks. And now when we build Cashflow Ninja into this educational company, now it becomes, how do we give back? How do we share these and teach these things, what we have learned over the past 20 years, to provide an intellectual shortcut? For example, how do we provide certain things that folks can follow and avoid some of the pitfalls? What was the Charlie Munger's got a great quote where he said, "If you told me where I would die, I just wouldn't go there." What essentially he was saying is,
He's doing a good job of not going there.
Yeah, exactly. Maybe somebody did tell him. But essentially it's like the same thing with life and money and investing is just tell me where all the pitfalls are and that's the stuff that I shouldn't do, the mistakes that other folks have made. And I won't go there. And that's kind of what we try to create. And that's what we kind of teach.
I like to ask all the Inspired Money guests, how do you define success?
It all depends on what your purpose is. I think success looks different for every single person, right? So success is defined by your vision that you have for yourself, your family, your community, your business, and then also your investments and the people involved with that. So, success comes in different, and when I look at success, I look at the different parts of my life, right? Having age-defying health, would be success, and I'm building towards that. Having soulful, meaning relationships, and having deep connections and great friendships, that's successful for me. Having businesses that I'm involved with, that I'm passionate about, that I love working in. It doesn't really, like all this stuff it doesn't feel like work because I really enjoy doing what I do. I think that's success. Investments too is finding people with your values, your principles that are like-minded on the same journey as you, partnering with them. That's success. That's success for me. And that's been one of the great things about the different, asset classes that I'm investing in. I started being, involved, being the person doing it. And then eventually, through hard knocks, I realized, wait a second, there's a better way to do this. I can actually find the best people in their niches, their niches that they're in, and partner with them. That's been a lot of fun. And essentially when people say, so you're invested in real estate, you're invested in energy, you're invested in crypto, you're invested, you cannot be you can't have it all down in every single niche. And I said, no, I don't, but I have the people down. And I enjoy the people and I love the people. That I define that as success, being invested in great project with folks.
I love it. Well, thank you so much for sharing your story as well as some lessons along the way. Can you tell the Inspired Money viewers and listeners where they can follow you and find out more?
Yeah, so cashflowninja.com is the platform, cashflowninja.com. And the book is the 21 Best Cashflow Niches. They can find that at cashflowninja.com/21 niches. That would take you to Amazon. And for your listeners and for your viewers out there, if they get the book, please just send us a screenshot of the invoice or something and email us at info@cashflowninja.com, and we'll give you access to an audiobook. We'll give you access to the digital version of the book. And we also have curated, this is another thing, I curated all the interviews that I share and discuss these cash flow niches in over the 5 years. And then we've also got a ton of bonus videos on all of this. So if they're interested in that, cashflowninja.com/21 niches.
Great. Well, thanks for the extra bonuses. Thanks so much, MC.
Thank you.
So what was your favorite Inspired Money moment? I like what MC said about building a team that you can trust so you can take action. He started doing that on the rugby pitch and took the leap, buying his first real estate property at age 21. I love how MC takes an hour a day to think, to be strategic. Take time to analyze trends, to be creative, to develop a bigger strategy for your wealth. I want you to take an hour today to review your finances. Don't watch TV tonight or skip scrolling through your social media accounts. Look at your retirement investments. Do you need to make any changes? Take gains, cut losses. Are you happy with the way your investments are positioned? Earmark an hour today to see if an hour spent makes a difference a year from now. Of course, if you need help, let me know. I'm happy to review your account and provide you with a second opinion. Thank you to everyone at On Air Brands for inviting me to the studio to record this episode. If you had a different favorite Inspired Money moment, let me know by posting a comment below. For watching to the end, I want to send you this Inspired Money sticker. Go to inspiredmoney.fm/Andy, send me your name and address, and I'll put one of these in the mail for you. Thank you so much for joining me on this mission. Have an inspired week and do something that scares you, because that's where the magic happens.